What is this kind of like? I'm not looking at it straight.
Good afternoon.
Good afternoon.
And welcome to Webinar Thursday. My name is Mary Jo Williams, and I am the Network Training Coordinator at the Virgin Islands Small Business Development Center. And I will be the facilitator and moderator for today's session, which is a part of the Basic Bookkeeping webinar series. And today's session is entitled Understanding Basic Accounting Terminology. Today's session is being recorded and will be posted on our Facebook page and uploaded to our YouTube channel, which can be found at SBDC. For today's session, we will answer the questions as we go along, but you are also invited to put your questions in the chat if you so desire. They will be answered as we go through the presentation, unless there's so many questions that we have to finish the presentation and answer the questions at the end. Okay, our presenter for today is Ms. Carmen Acevedo Adams, and Ms. Adams has worked as a bookkeeper for over 25 years. Her clients range from restaurant owners, contractors, EDC companies, nonprofits, and homeowners associations. As a full-charge bookkeeper, she has worked on accounts receivables, accounts payables, payroll, payroll taxes, monthly, quarterly, and yearly local and federal tax reports, posting of daily sales, bank reconciliation, and journal entries. In 2016, Ms. Acevedo Adams started her own business as a full-charge bookkeeper. She currently works as an independent contractor for the Small Business Development Center, as well as an English, Spanish, English interpreter with local attorneys and other businesses. She loves what she does, and she's doing, she loves what she's doing and truly enjoys helping people understand the importance of good record keeping for their financial well-being and for their businesses. Now, Ms. Carmen Acevedo Adams, at this point, I yield the floor to you.
Good afternoon, everyone. Really happy to be here. Really happy to have you here with us. I'm excited that you think this worthy of watching, and I hope that you get all your questions answered, and whatever we cannot answer right now, we can answer later. Also, remember that the SBDC has excellent counselors, business counselors that can help you with any of your business needs. We have just a couple of poll questions that I wanted to get done just so that I can get to know you a little bit better before we start our presentation. So Mary Jo is going to put those up now. So basically the first one is, are you in business? Are you a business owner? Are you working for someone? That will tell me. One of my goals with this seminar or webinar is to assist business owners to understand better the books aspect of their business. And it's very important, as we're going to talk throughout today's presentation. So I hope that a lot of you are in business.
Okay, I'm going to end the poll now. And of the participants that answered the question, 70% of our attendees are currently in business and 30% of them are not.
Okay, wonderful. Okay, so there's another poll question.
There is. Our next poll question. Do you have any accounting knowledge? And we'll give you a few seconds to answer that question. Also, while you're answering that question, you guys can drool over that beautiful scenic background that Ms. Acevedo has. Oh man. Okay, we're gonna end the poll now. 83% of the persons have some knowledge of accounting, and 17% do not.
Okay, good.
Last poll question for right now is, what do you hope to get out of this presentation? And you have multiple choice answers. Understand what my bookkeeper needs to do to become an accountant, or know where my business is financially. All right, those answers are rolling in, Miss Acevedo Adams.
Sorry, I have my cat that wants to present with me,
Okay.
climbing all over my back.
All right, because there are 3 questions in that one, we'll give them another 5 seconds. And we will end the poll now. And 41% want to understand what their bookkeeper needs to do. 24% want to become an accountant. And 47% want to know where their business is financially. And you're going to talk to them about accountants, right?
Yes. Good. Okay, so that tells me a lot about you guys, and I am really happy, like I said, to know that 70% of you are in business. I'm a little intimidated by the fact that 83 of you are in accounting. So I hope that anything that you hear here can be of help to you. And also, I am very encouraged by the fact that 41% of you want to understand better, which is our goal. What we're going to talk about is the importance of appreciating numbers, what that can tell you. And basically, bookkeeping is numbers. One of the things that I wanted to say right off the bat, though, is the fact that I am a bookkeeper. I am not an accountant. There's a big difference between a bookkeeper and an accountant. And sometimes that line is blurred for some business owners, and they might ask bookkeepers to make decisions or make postings that really belongs to an accountant to do. What is the difference? An accountant probably may have about 4 more years of learning, of specialized learning. And they are more up to date with the tax laws. They can do a year-end report as far as the 1120s for corporations, the 1040s, and they are supposed to know what is the best thing for you as far as, are there any credits that you can take? What is the best way to show your business on that income tax? How is the best way to get the most for your dollar? A bookkeeper simply puts all of that all the information of what your business has done throughout the year, compiles it, compiles it, and then at the end of the year, we hand over that information to the accountant, and then the accountant, based on those numbers, will determine how to make that end of the year report to Internal Revenue Service. The accountant, it would be great always if your accountant and your bookkeeper have a very good interactive relationship, that the bookkeeper is feeling comfortable to call the accountant and say, listen, this is something I don't know where to post it to, what to expense it to. Can you give me guidance? So there is a difference between being a bookkeeper and being an accountant. So that's just my disclaimer right there. I am a bookkeeper. I have been doing it for a long time, and I love what I do, but I will never claim to be an accountant because I am not. Simple. One of the reasons that is so important that as a business owner or even as an accountant, you know what you're doing. The business owner needs to know to make decisions, to make good decisions about his business. He needs to know where his business is financially. And a bookkeeper, a person that is properly keeping those books, would be able to provide that information for a business owner. Also, we're going to talk about certain reports that you can ask at any given time during the year from your bookkeeper. And if those reports are properly done, you should be able to see if something is wrong in your business, if something is not where it should be, if money's coming out of your business that you didn't know about. So there are many reasons why you should, as a business owner, know you don't need to be a bookkeeper, but you need to know what those reports should look like and what they say. Okay, and that's some of the things that we're going to cover here. So we're going to speak about today, basically, we're just going to talk terminology. What are the different terms that are used in accounting, in bookkeeping? What do they mean? What do they cover? And then later on in other, in the following weeks, we're going to go more in depth into those. Terminology, cash and accrual, what's the difference between that? What is the best one for your business, for your particular business? Journals and ledgers, payroll, and under payroll, there should be payroll taxes, payroll reports, payroll laws, HR laws. There's so much under payroll that we need to be aware of, and that a good bookkeeper should also be aware of. Right now, because of COVID, there have been many changes to what what an employee has a right to. So as a good bookkeeper needs to keep on up to date with that. And you can do that by just keeping up to date with the news. IRS.gov is an excellent site, and whitehouse.gov gives you all the information you need to know about what's happening and what changes have been made. Planning and budgeting and control, we're going to talk about that. And then we're also going to talk about auditing. To many people, that's a bad word, but if you are keeping your books the way that you should, that should not be one. You should not be afraid of that, okay? So we're going to talk about all those things. Let me see, okay. So we have to start with the beginning, of course, so that we're going to start with terminology. So balance sheet. The balance sheet is, the name says it all. I can't see. Give me 1 second. Mary Jo, is there any way that I can get this? Yeah, I think so. I just did. Don't worry. The strip of seeing you guys, it's not letting me see my presentation. So if you notice here, the balance sheet you have, first of all, you notice that it gives you a specific date. This is not saying January through December 2015. This is saying December 31st, 2015. Balance sheet is a snapshot of your accounts at a given date, at any given date, which tells you that you can request a balance sheet at any given time in the year from your bookkeeper. There you're going to find what your assets are. You're going to find what your liabilities are, and we're going to talk about these terminology soon, and what your owner's equity. And as the term implies, it should balance. If you notice at the bottom, it balances, is the same amount, okay? The total assets equals the owner's equity. Okay, let me see if I can take this out of here because this is, okay, oops. Sorry about that, guys. I'm trying to maneuver this so that it's not covering up the presentation. So your total assets equals total liabilities and owner's equity. So you see that at the bottom, you have the same amount. So a balance sheet, and it gives you, if you notice what under assets, what are some of the things, and this is just a sample. There are many more things that can go in there, but things as cash, accounts receivable, prepaid rent, inventory, those are considered assets. You can have long-term assets, such as leasehold improvements, accumulated depreciation, okay? Then in liabilities, you have accounts payable, accrued expenses, unearned revenue, okay? As owner's equity, you have retained earnings, common stock. So these are some of the things that can be lumped under those categories. And we're gonna learn what those are later, okay? But just a little snapshot of what balance sheet is. And again, just think of that word snapshot. Balance sheet is showing you where your business is at a given time in your business. So you ask, give me for say December 31st, 2020. Or right now, because of the many loans that are available through the federal government, we are asked to take a quarter. So you might want to.
We're not seeing the presentation.
Exactly. We're not seeing the presentation.
Oh, what did I do? Maybe I did something. Give me 1 second. Where am I? Okay. Can you see it now?
Yes, ma'am.
Okay, I was trying to, it's take,
Let me see if I share it, maybe.
the strip is kind of taking some of my
Okay,
so
you have a black box at the top that says view options. Maybe exit full screen.
okay, are you seeing that?
Yeah, but that's showing the small slides on to the left. Okay, at the top of your Zoom screen, does it say you're viewing Carmen's screen or you're sharing your screen? And then there's a little black strip that says view options.
No, let me see.
Or maybe
sorry to take your time, guys. I am really sorry. I don't know what I'm doing here, obviously. Okay. Can you see the screen now?
Yes, we see the PowerPoint.
Okay, well, let's go ahead. Let's go ahead. I don't know if I could just move this over. Okay, let me put it up here. That's better. Okay, so assets. It's economic value in your business. It's owned or controlled by the business. These are resources owned by a company which have future economic value and that can be measured and can be expressed in dollars. Examples include cash, investments, accounts receivable, inventory, supplies, land, buildings, equipment, and vehicles. These are all assets. And remember, assets were in the, if you're looking at the balance sheet and you're facing it, it will be on your left-hand side. Assets are reported on the balance sheet, usually at cost or lower. Assets are also part of the accounting equation, which is what we mentioned before, assets equals liabilities plus owner's equity. Owners or stockholders, if you're a self-employed or if you are just one owner, then it would be owners. If you're a corporation, a partnership, then you may have stockholders. Some valuable items that cannot be measured or expressed in dollars include the company's outstanding reputation, its customer base, the value of successful consumer brands, or its management teams. These these are assets that are part of your company, but you cannot put a monetary value on them. Therefore, they cannot go on your balance sheet. But it is definitely an asset that you want to build up, that you want to have. And you want to have a good reputation as a business, especially in a small island like St. Croix, St. Thomas, St. John. Everybody knows everybody. So you want to be the person that they refer to when they need your services, when anyone needs your services. Liabilities, future sacrifices, responsibility to another, settlement of a debt. So basically it's obligations that your business has to others. Amounts that are owed, whether it be to lenders or to suppliers, whether it be to your parents who gave you the deposit so that you could get started and you owe them that money. All of that would be considered a liability. Liabilities often have the word payable in the account title. Liabilities also include amounts received in advance for future sale or for a future service to be performed. So let's say that you have a contract and you are paid, part of the contract says that you have to receive upfront a certain percentage. That percentage becomes a liability until you fulfill that contract, until you fulfill that. So it becomes a liability to you because it's monies that you have, but you really owe them. Equity is ownership of assets after debts are paid. and can be sold for gain.
Excuse
You
me?
have any questions, MJ? Owner's equity is sometimes referred to as the book value of a company because their owner's equity is equal to the reported asset amounts minus the reported liabilities amounts. So when someone is going to, a bank is thinking of lending you some money, they're going to look very hard at that balance, that equity. They're going to see where you are, okay? How extended are you? Are your liabilities a lot more than your assets? Are they long-term liabilities? Those are things that they will look at to determine how solid an investment you are to them. So another report that is very important to any business and that I strongly recommend business owners to look at least every quarter, if not every month, is income statements. Okay, now notice here, the income statement is not a snapshot. Here we're looking at a whole year. Now you can get an income statement for any period of time, but usually income statements are provided at the end of a year. For example, Department of Licensing, Lieutenant Governor's Office, you have to do an annual report. They want to see a yearly income statement, okay, and a balance sheet for that matter. So here you are looking at a lot more information of your business. Here we're looking at what happened that whole year, okay? And you have revenues, merchandise sales, music lesson income. So you notice that you have two different types of income. You have sales, but then maybe you have something else that you do or that you offer. For example, I'm a bookkeeper, so I have that service. Those are part of my sales. But then every once in a blue moon, I also do interpreting because I am an interpreter, but that's not something that I do every day. So every once in a while, I may have interpreting income as well. So that would be shown differently, okay? Now you have expenses, and here you have a list. Again, this is just a sample. Every business has their own set of expenses, okay? So if you see something here and then you ask for an income statement and you don't see it, no, every business you are your own world as to what are the expenses particular to your business. So you want to see those expenses that are particular in your business. You want to see them recorded in your income statement because it means that they're being captured. And if they're not, then you have to talk to your bookkeeper, okay? And your accountant. So some things that can be, that are, everyone has or may have: rent expense, interest expense, utilities expense. We pay WAPA, we pay telephone, we pay internet, okay? Or those are all supplies expenses. If you have an office, you need office supplies. Now with COVID, you need the PPE supplies. So all of those things should be part of what is shown as your expenses. And then you have your net income, which if you notice here, your net income would be your revenues minus your expenses. That gives you your net income. Any questions? No? Good. Okay, so revenue. Revenue is fees paid to any lender, income from products or services, or monies received from a transaction. So from primary activities are often referred to as operating revenues. Revenues that are received from primary activities are operating revenues. For retailers, manufacturers, wholesalers, and distributors, the revenues resulting from their primary activities are referred to as sales revenues or simply sales. For companies providing services, the revenues from their primary services are referred to as service revenues or fees earned. Under the accrual basis of accounting, remember we talked about there's two different bases for accounting, cash and accrual. Under accrual, service revenues and sales revenues are shown at the top of the income statement in the period they are earned or delivered, and not in the period when the cash is collected. We're going to discuss that a little bit more. What is accrual versus cash, okay? So, but that gives you a little hint of it. So the revenues are shown in the period they are earned and delivered, not in the period when the actual cash hits the bank. Put simply, revenues occur when money is earned, receipts occur when cash is received. Okay, questions? Okay, good.
No
Cost of-
questions right now, but I just put a copy of the presentation in the chat.
Okay. Cost of goods sold. And in many of the reports, all you're going to see is COGS, but that means cost of goods sold. Those are cost of producing a product, cost of inventory sold, and purchases made minus ending inventory. At the last session that we had, I was asked if cost of goods sold can be used for services. And at the time I said yes, and I still stand by that, but I did a little research. And technically it was said that it's for products, but, and instead of cost of goods sold, we can say cost of services, COS. And that's the correct way of putting it. So if what you offer is not goods, it's not a product, it's not anything that is tangible, it's a service, then instead of cost of goods sold, you would have cost of services, COS, okay? Just to clarify that. So cost of goods sold is the cost of the products that a retailer, distributor, or manufacturer has sold. When the cost of goods sold is subtracted from the net sales, the result is the company's gross profit. What is cost of goods sold? What can be that? So, of course, if you are a manufacturer, a retailer, a distributor, you have to buy certain things to be able to make that, to be able to then sell it and gain profit from it. But there are all sorts of other things that also happen that cost you money to be able to then produce that product or have that inventory to be sold, such as shipping. Maybe you have to ship some of the product over here. Maybe you have to ship the product because you don't produce it, but you import it and then you resell it. So that's cost of goods sold. You may have, maybe you are you make something. Let's say you're known for your beautiful rocking chairs in this particular wood. The wood you imported is not found here in St. Croix. So all of the costs for you to get that wood here, all of the costs for you to produce that final product, those are cost of goods sold. So you may have a certain stain, you may have a certain particular glue, excuse the plane. You may have canvas to put over it. Whatever you also have to get to produce that finished product for sale, those are all cost of goods sold. So keep that in mind, okay? It's very important because you want to know exactly how much something costs you. If you are as a manufacturer, or you're producing something, even if you're constructing something, you want to be able to give a good offer. You're going to say, okay, this I'll do it for you for $1,000, but it costs you 800 almost to then you're not making anything. That doesn't make sense. So you need to know what your expenses are and to be able to raise that bottom line, which is your gross profit. So you need to be familiar with this. Expenses. Expenses involved in primary activity are expenses that are incurred in order to earn normal operating revenues. It's common for expenses to occur before the company pays for them. For example, wages that are earned by your employees, employee bonuses, vacations, utilities, sales commission. I know, for example, broadband charges a month ahead for the internet. So you're paying that even before it was actually used. So those are before. However, some expenses occur after the company has paid for them. Expenses from secondary activities are referred to as non-operating expenses. For example, interest expense, because it involves the finance function of the business rather than the primary activity of the buying and producing and selling or offering a service. Okay, but expenses is a very important word for any business owner, one that you have to be very familiar with. What kind of expenses your business is going through and how is it impacting that bottom line, okay? When there are too many expenses and not enough income, there's a problem. Salaries and wages and depreciation of assets, two separate things. Wages is salaries, wages, and everything that goes under that. All the taxes you have to pay, the workman's comp, the VIESA, the unemployment insurance, the Social Security, the withholding, all of those are expenses that fall under payroll, okay, under wages. Depreciation of assets, that's also an expense, and we're going to talk a little bit more later. The accounting period. This is the amount of time in which income statements and other financial statements are utilized to track and report operating results. Accounting period for financial statements, usually, as it says here, is a calendar year, right? Or a calendar quarter. For most, again, going back to the loans that I hope all of you as business owners are aware of and are making use of, the PPP and the EIDL through SBA, they will ask you for quarterly statements, quarterly reports on your payroll, for example, compared to another quarter. They would ask for end of the year, a calendar year report, the EIDL probably. Okay, so an accounting period is from this to that, basically. Okay, and usually it's done in yearly or quarterly, but it's your business. Whenever you want to know how your business is doing, you can ask for that. Okay, just keep that in mind. And you want to know that, you want to ask for that often. Okay, so the financial statements for the monthly accounting periods are likely to be used only by companies, managements, but government will ask you for those as well. Okay, so government asks you for and we're going to go through this when we do payroll, but you have 941 VI, that's a quarterly report. You have 941 SS, that's a quarterly report. You have VIESA, that's a quarterly report. If you're an EDC beneficiary, you also have other quarterly reports that you are going to be asked for. So it's important that these reports are done timely and that they are correct. So basically, we discussed balance sheet, and remember, we're only discussing terminology, very lightly going over this. We're going to go in depth in the following weeks. Balance sheet, liabilities, equity, income statement, revenue, cost of goods sold, COGS, and what an accounting period is. Any questions so far? No?
No questions.
Okay. So we're going to finish here with about basic accounting terms that will help you better understand what is going on with your books. What is accounts receivable? Accounts receivable, basically, in a nutshell, money owed to a business for a product or service provided. So you went and you did landscaping in somebody's yard, and then so you provided the service. So now they owe you whatever your fee is for that work that you provided. So either you have an agreement with them that you do it on a monthly basis, and then you invoice them for that work, then that's part of your accounts receivable. You need to know how much is out there on the streets. So this is a very important part of your business. So accounts receivable, you need to always know how much is out there in the street that is owed to you. Is money that is owed to you for services or products that you have provided, okay? Then you have the diametrically opposed of that is accounts payable. This is debts owed by a business to creditors for purchased goods or services. So basically it's money that you owe for whatever reason. It could be you owe WAPA, it could be you owe broadband, it could be you owe your supplier, It could be you owe reliable rentals because you had to buy the string for the weed whackers, whatever it is, and you took it and they invoice you. So it's the other side of the coin. You're not doing the invoicing, someone else is invoicing you, and so that's accounts payable to you. So it's monies that you owe. So it's very important to know both. If you want to have a balanced business, usually you want to have your accounts receivable higher, but you're good if they're balanced. If it's the other way around, that your accounts payable is higher, then there's a problem there, and it's not good. So you want to always know where you're at with these two accounts, okay? Depreciation. This is a big subject, and we're going to talk about it more in depth later on. But basically what it is reduction in the value of an asset with the passage of time due to wear and tear. There's very strict laws about depreciation, how many years, what percentage, depending on what it is, okay? So these are all things that an accountant is better informed of. And an accountant should always keep an eye on what needs to be depreciated and inform the bookkeeper on how to keep that up to date, okay? So this is important also for a business. General ledger is considered to be a permanent classified record for each business account. It's an account or record used to sort, store, and summarize a company's transactions. These accounts are arranged in the general ledger and in the chart of accounts, with the balance sheet accounts appearing first, followed by the income statement account. So you have your assets, you have your equity, you have your liabilities, and then you have your expenses, and you have your income, okay? So basically these are the books that keep all that information that we talked about. Of course, I don't know anybody that still does it in books. Basically, it's done in software now. It's software that is very common here, and it's very widely used because it's pretty user-friendly, is QuickBooks, but it's not the only one. There's many others. And most of all of these information, the accounts receivable, accounts, all of that is kept in the QuickBooks, if that's what you're using. Interest is a type of compensation to a lender for taking a risk of principal loss when money or another asset is loaned. We all know what interest is. Interest is what they charge you for giving you money. And it's something that not only is charged to you, but you also can charge if for any reason you provide services or and you allow them to pay you in a time lapse kind of thing. So you want to keep that in mind. It is an expense, keep that in mind also, because you want to make sure that if you have any loans, if you're paying interest in credit cards, whatever, you want to make sure that that is shown in your tax report, because it's for your benefit. Inventory. Inventory can be described as either a list of goods and materials or the goods and materials themselves. So you can say, we're gonna do inventory today, and then they do it and they bring you a list. You can say that's inventory, right? It signifies what you have. Or you can go and look at the actual merchandise that you have just inventory, and that is inventory. So it's either a list or the goods and materials themselves. And a lot of the software today, of the accounting software, have what is called POS, point of sale, those guns that they use. And what that does is it can help you to keep your inventory up to date, because what it will do is, okay, say you receive 30 batteries, you sell batteries, auto parts, you receive 30 batteries. So you put it into the software, and then as these batteries are sold, it removes it from your inventory. And therefore, at a given time, you can say, oops, we're down to 5, time to reorder, we're down to 10, time, So there are those, that kind of software is available to, and then you don't have to be a big business to use that. They're very simple, very easy to use. QuickBooks, again, has POS systems. maybe not the best, but there are other companies that do better. Journal, again, a journal is used to record the financial transactions made by a business. Journals are kept today mostly in software, accounting software. You can keep it in as simple as a spreadsheet. You can keep a journal, okay? You can keep it in an actual journal. So it's up to you. It's up to you. Payroll is the company's financial list of the salaries, wages, bonuses, net pay, and deductions of their employees. We're going to talk also a little bit more later on this, but deductions, say that you pay half of your employees' insurance, medical insurance, and they pay the other half. So you have to keep track of that, okay? And that's part of what a journal, you know, the things that you want to keep track of. Say that you pay for their vacation. You allow them 2 weeks vacation. You want to keep track of that. So you have to keep those records. You want to make sure that they're not telling you, oh, no, I haven't taken, and you know, they're on the 3rd week by now. That kind of thing. Trial balance. A trial balance is a worksheet usually prepared at the end of each recording period. And as you can see here, you have your debits, which are minuses, okay? In other words, they take away, and your credits, which are plus. A trial balance is a bookkeeping or accounting report that lists the balances in each of an organization's general ledger accounts. Often the accounts with 0 balances will not be listed. They don't impact. The debit balance amounts are listed in a column with a heading debit and the credit with a heading credit. The total of each of these 2 columns should be identical. Again, notice the word balance. So they need to be balanced. If for some reason they're not, then you have to go back and look at everything that has been input and see why. So basically, accounts receivable, money owed to a business. Accounts payable is money owed by the business. Depreciation is a decline in value of assets. Trial balance is the balance of all ledgers, usually in the format of 2 columns, okay? Any questions? No questions?
No questions.
No questions. I'm sorry?
No questions at this point.
Oh, wow.
You're on the mark.
Yeah, it's okay. So next week, we're going to talk about accounting methods, the accrual versus the cash, which is the best for you, and what does the law says, if there's anything as such, and why would you choose one over the other. Keeping track of your business, we're going to go more in depth into accounts receivables, accounts payables, the journal, the ledger, and cash management, okay? So I hope that this was informative. I see that I still have some time. If you have any questions, I'll be happy to go over those. Keep in mind, this is the first of 5 weeks that we're going to be considering all of these items more in depth. And just if there's anything that I want to say is, as a business owner, please know your business, know what's happening with your money. Many business owners say, oh, I have it here, but it's impossible to have everything there. Maybe you forgot the bill that is sitting, you know, of $1,000. Maybe you forgot that someone else owes you, you know. So you need to have these things put into in paper, so where you can see them in black and white, and you need to review them often so that you can make wise decisions. We're going to talk about cash management. It's a lot about what you need to know to make smart decisions regarding your business, okay? We have a couple of questions that we wanted you to answer, if you may. Based on the information you received today, how likely are you to complete the 5-part series?
Looks like you're a winner, Ms. Adams. Of the people that responded, 82% said they're likely to attend, most likely. 18% said likely, And nobody said not at all. So I guess we're gonna have some repeat attendees.
Good. I'm happy to hear that. It may sound like a lot, but based on the fact that 83 of you are in accounting, I'm sure that this was like kindergarten stuff for you. But for a lot of people, this is not as simple. So that's why we wanted to go over that, okay? What's the level of the presentation? What was the level of the presentation for you guys? Let me know that, please.
Okay. We'll give you a couple of more seconds. Looks like you're right on the money, Miss Adams. People are still answering. And we'll give you guys 4 more seconds. And we'll end the poll now. 100% of the people that answered said it was just right.
Wow, thank you. I'm glad that's the way you feel. Okay, so I hope to see you next week. I also welcome your comments. I also welcome your critique. That is fine. Seeing that you're 83% of you are in the accounting field, I would love to get some feedback from you. And so anytime you can either email me, you see my email there on the slide that has my information. You have my phone number. Feel free to call me anytime. Where are you located? We want to know that as well.
Oh, we actually have a question in the chat. It says, can we get the presentation at least early the day? Well, the presentation was sent out early this morning for the people that had registered. And I sent it out just a few minutes ago to a couple of people that just registered. Okay. And in terms of the polling, 53% of the people are from St. Croix. Good. Okay, 42% are from St. Thomas and 5% are other. So as you register for the other webinars, as soon as you register, I'll send out the manual and we'll send out the actual presentation the morning of. Is that good, Ms. Adams? Mm-hmm.
Yeah. Yeah, that works. Let's see. Okay, so I'm really happy that you are here and that you took the time to do this. And I really look forward to speaking with you next week. And as we go into it, it's going to get a little more, it's going to be a little more meat, so to speak. Now we're just doing baby food, but we're going to get a little meatier as it goes into it. And again, I welcome your feedback. And business owners, keep on top of your business, please. It's very, very important. One of the things that I wanted to bring out to you, remember the PPP, we have a second chance at it. And there is a time period of up to the 31st of this month. So please make use of that. And then we also have the EIDL loan. So these are all the economic injury disaster loan from SBA. So look to see, and for all of that, you need these reports. So look to see how you can benefit from these provisions, these financial assistance that is made available right now. It's going to stop at a given time. It's going to stop. So look into your business and see how. And if you need to maybe talk it over and maybe don't understand how it benefits, call SBDC and talk to some of their counselors. Okay, do that.
Do we have another question? Can a business employ a part-time bookkeeper?
Yes, you can. Yes, you can. It depends on the size of the business, I would say, because if you are a good sized business with a lot of traffic in operations, a lot of business going on, and you want it to be up to date, you are probably better off having someone there to do the books on a daily basis. But for example, I have clients that they have someone that is just doing the posting, and then once or twice a month I go in and then I do everything that has to be done that person doesn't do. And I'm always on call for that person should they have any questions. So I don't do the actual posting, but I kind of keep my eye on it and I make sure that it's done properly so that when I come, then I do the nitty-gritty of it and keep that business up to date. So yes, you can have a part-time bookkeeper, but basically I would say, depending on the volume of business that you're having, if you are a small business that you're just starting and you just have, very little in and out of money, then maybe once a month you can have someone come over and do, take a whole day or a day and a half and do all the posting, do reconciliations. We're going to talk about that. Do all of make sure that the deposits are posted, make sure that the invoices are posted, the payables and the receivables are posted, so that at any given time you have a clear picture of where your business is. So this is very important. Many times we want to shortchange on that, but it's so important. If you could do as many reports as you want, but if those reports are not right because they haven't captured everything that happened in your business because it wasn't posted, then what good is it, So to have reports that are beneficial to you, those reports have to be correct. For those reports to be correct, they have to have the information put into, and if it's a software, QuickBooks is going to be only as good as you put in the information you put into it. So yes, having someone to keep your business up to date on that. I have clients that I see only once a year, and they will bring me this big box of papers. Here, and it's not, you can't just do that. You have to, so during the whole year, that person didn't have a clear idea where his business was. He didn't really, so don't do that. Don't shortchange yourself on that. There are many ways of doing it. Maybe you don't need to pay a full bookkeeper, but you can have someone a bookkeeper teach someone in your business to do the postings correctly, and then the bookkeeper come once or twice a month and do, what needs to be done. But don't shortchange yourself because you might pay for it later.
And there's a question, do I have to register for the next session? Yes, you have to register for each session. And I think it's set up so that you can register for all of the sessions at one time.
Okay, I don't know about that.
All right.
Okay. So we'll see you next week if no one else has any other questions. But happy to have you here, and I hope I can see you again next week.
Well, I have a little commercial. If nobody else has any questions, we will have a session on Monday. It will be the VI SBDC Lunch and Learn honoring International Women's Day, and that will be at 12 noon. You can register for it on our website. You can register for it on our Facebook page, and you can also go to our web portal at sbdcvi.ecenterdirect/events and register there. Actually, you can see all of our webinars there. And then next week on Thursday, we will be back with yours truly, Ms. Carmen Acevedo Adams, for session number 2. And that will be, let's see, what is that called? Accounting methods, keeping track of your business. And you probably won't finish early for that session.
No.
No. All right. And then for people that are veterans, spouses of veterans, children of veterans, we have we have the Boots to Business session on Thursday and Friday next week from 8:30 a.m. to 12:30 p.m. It's 2 4-hour sessions Thursday and Friday. And it's an excellent set of webinars. And the presenter is a retired Army veteran. So he will be giving you the best of the best from his personal experience, as well as from the series, the seminar series that's been prepared by the Veterans Business Outreach Center. And what I learned on Tuesday when we had him as a part of the SBA Webinar Tuesday series, the fact that children of veterans can also use this information. And I was like, whoa, that's monumental. I was like, I'm a child of a veteran.
Mm.
So even I can use that information, but a lot of young people are out there trying to do stuff, and a lot of people are trying to do stuff on their own, and we have resources that you can use. And one of the worst things to happen is to have resources out there that are free. That magic 5-letter word, free, FREE, already paid for by your tax dollars. Take advantage of the information, share the information with other people if it doesn't pertain to you, because a rising tide raises all ships. So we all benefit in the long run if we take advantage of the information. So that's that. And then next week, Tuesday, not next week, Tuesday. Well, next week, we'll give you the update of what's coming after. But we have some fabulous series coming. We have the contracting series, which starts on March the 18th, a session of 6 webinars where we talk about government contracting, getting grants, all sorts of good information. The SBDC, man, our March calendar is just jam-packed with stuff. So check us out on the webpage, check us out on our Facebook page, share the information with your friends, and know that the SBDC, we've got 2 offices, one in St. Croix at 6300 Estate Peters Rest, suite number 4, next to the Sprint T-Mobile office. And we're not seeing people in person in the office right this minute, but we are seeing people over the phone, using Zoom, via email. And we also have a new office location on St. Thomas in the old West Bay building where the census was located. We're not seeing people in person in our office yet either, but email, phone, Zoom, and we can still assist you. And like Ms. Acevedo Adams was saying, that Paycheck Protection Program loan, it expires on March 31st. The lenders, most of them are not taking applications the last couple of days of the month because they have to have time to process those applications. So, and if you qualify for that loan, you can also, if you use it for the purposes intended, that loan can be 100% forgiven, which in essence means it's free money. Well, it's not free because you have to take time and effort to fill out the paperwork, but it's money you don't have to pay back. And if you can be a sole proprietorship, an independent contractor, any business can apply and receive those funds. So don't let this money go to all those other communities. Nobody needs the money as badly as the Virgin Islands community. And then there's all, and if you don't use those monies for the reasons intended and you have to pay it back as a loan, the interest rate is only 1%.
Right.
And you have up to 5 years to repay.
Yeah.
Okay. And then there's the economic injury disaster loan. That interest rate is 3.75% for for-profit businesses and 2.75% for nonprofit businesses. And this is one of the few times that the SBA assists nonprofits. Okay, so take advantage of the funds, and you can use the economic injury disaster loan for things that you cannot use the Paycheck Protection Program loan for.
Right.
So you can get both of them. Okay, the Paycheck Protection Program, you apply directly through your lender. And the economic injury disaster loan, you apply online directly to SBA.
To SBA.
Now, one of the misconceptions is that the local SBA can tell you the status of your loan application. They cannot. The disaster SBA and the regular SBA offices, yes, they're both under the Small Business Administration, but they're 2 separate offices. They cannot see each other's computer databases. So yes, they can answer general questions, but you need to apply if you need the funds. And the economic injury disaster loan deadline is December the 31st. But again, you don't want to wait until the last day of the year to apply, because if the clock runs out before your application gets through the process, you lose, and we don't want to lose.
And I just wanted to say, I attended one of the webinars that SBA held recently, and Mr. Hulson was talking about that, and he said, many people saying, well, I don't need it now, but you don't know if you're going to need it later. It's such a small interest rate, and the terms are so good. Take the loan, and if anything, you find that you don't need the money, then you can use that same money to pay it back. It doesn't hurt you to have that cushion, especially now. We're entering hurricane season again very soon. So there are many things that are happening. We don't know when everything is going to open. What is it going to take for your business to be able to fully open to the public, to recuperate and get back to where it was? So this is a cushion that can help you to not be sweating it out all the time. And it's up to $2 million is the ceiling of what can be borrowed, depending on your needs and your business. But it's a 3.75, and you're not going to get that at any other given time. So just think about it, and look into it. At least familiarize yourself with the terms, familiarize yourself with how it can be used. You can, again, go to SBDC, you can go to sba.gov. All the information is there. Knowledge is power. So just don't make decisions without having background information to base that decisions on. That's all I'm saying.
Yep. And not only that, the SBDC offices are only open 8:30 to 4:30, but you can go to the SBA website at sba.gov. You can go to the Treasury website, Department of Treasury website, and those things are open 24/7. And basically everything we're telling you, that's where we get the information from to share with you. And the SBA does have an 800 number, 800-659-2955. That's 800-659-2599. And if you applied for a loan before, the economic injury disaster loan, and you were denied because you didn't have something in order, you can ask for a reconsideration. So check with the SBDC if that's the situation. If you started last time and you didn't finish, check with the SBDC, because there's a lot of money out there, and we can't help you if you don't make that first step. And there was a question about the PPP loan forms. Those forms you get generally from the lender's website. The lenders in the territory that are participating: Banco Popular, First Bank, Oriental Bank, Bank of St. Croix, Commercial Bank. Each one of them has information on their website about the PPP loan.
And the form is going to depend on whether you took the first PPP loan, if you already had one. So the second one, the form is going to be a lot simpler, a lot simpler. If it's the first time, then you have to give all the information that as a first time loan. But if it's the second time that I'm requesting the PPP, which you can, then it will be a lot simpler. It's recommended that you do it with the same bank that you did it with for the first time, because then they don't have to ask you for all of that information, all the paperwork and all of that they asked for the first time. And this form is a lot simpler and a lot easier for the process, okay? Keep that in mind.
And if you don't want to use a local bank, there's over 5,000 different lenders that are participating in the program. So you can use on island or off island.
Off island, exactly.
You use who you have a relationship with, but you don't have to. All right. And let's see, do we have any more questions? All right, our phone number and our email address and our websites in that last slide. So you can call us, email us. You can even send us a USPS letter, but call us and we'll be happy to get back to you. Now, sometimes it takes like 24 to 48 hours to get back to all of those phone calls because the phones are ringing, but we will get back to you. And if you haven't registered to become a client at the SBDC, register so we can help you out.
You all have a good afternoon, and we'll see you next week.
All righty.
Bye.
Okay.
Bye-bye.
Have a good one.
Okay, bye-bye.